Alright, for this video I want to go over a sample Form W-4 for a single filing taxpayer and how he can complete this to try to reduce the amount of federal income taxes that are coming out of his paycheck every period. So I've got the sample Form W-4 here for the 2023 year. But in addition to this, I also have a couple other pieces here. So I do have an extract, right? So Schedule 1 coming from his Form 1040 for 2022. So we'll go over why this is important later. And in addition to this, we do have a version of the 2019 Form W-4. And the reason why I want to look at this as well is to show some of the big changes that happened from 2019 and 2020, and which is why you have to complete the form a little differently than you had in the past. Okay, so before we go back into those W-4 examples, I've got one slide here to cover the fact pattern and some of the general rules here, right? So the Form W-4, for those of you that are not familiar, this is prepared by an employee and provided to the employer. And the employer uses this information to determine how much federal withholding tax has to come out of those paychecks every pay period, right? So you have to provide a new one every year. And if you're an employee that starts a new job during the year, you complete this W-4 and you provide it to your employer. Now, in 2019 was the last year that employees were able to claim allowances, right? So if I go back to the 2019 version, this is one of the greatest questions I get every single year is, what do I have to do on the withholding certificate to claim less withholding? Where do I put the allowances? Well, the allowances system is gone, right? So in 2019, you had the option, 2019 and prior, you had the option to enter a various number of allowances, and the more allowances you claimed, the less withholding came out of your paychecks. In addition to that, you could also claim an exemption completely, and that option was listed directly on the form, right? So on line 7 here, right, if your income tax liability last year was 0 and you anticipate having no taxes owed this year as well, you can claim exemption and you'd be completely exempt from federal income tax withholding, but your employer would still take out the payroll taxes. Now in the 2023 version of the form, what you'll notice is that whole allowances system is gone. That option is not there. And they haven't entered the language that allows you to claim a complete exemption from the withholding, but that option still exists. So unlike the 2019 and prior versions of the form, they don't have the language entered directly on the form, but it is available in the instructions, right? So in this section here, an exemption from withholding. So the same rule applies, right? If you don't have any income tax liability from the prior year and you anticipate you'll have none from this year, you can still claim an exemption, but they say to claim the exemption, certify that you meet both of these conditions above, and you write exempt on W-4 underneath step 4C. So underneath 4C here, you would handwrite in exempt, or you could type it in if you're doing it on like a PDF editor. But again, notice how they've kind of hidden it a little bit. You have to read the instructions to determine whether or not you can even claim this exemption, versus in the prior years they just had it directly on the form. So if you determine that you're exempt from withholding because you're not going to have any income tax liability, you can write exempt underneath there. You would leave all these fields blank, but you would still complete the information up here at the top, and then obviously sign down here below. Okay, so now what if you're not exempt? So in our scenario, John is not going to be exempt. He's going to owe some federal taxes for the year. So how should he go about completing this? Well, if we go back to the fact pattern here, let's look at more of the details on John's filing status. So he's a single filing taxpayer. He has no dependents. He has one job full-time as a sales agent, and he's going to make $65K for the year, and that's going to be reported on his W-2. Now, as far as deductions on his 1040, he's going to be claiming the standard deduction, which is going to be $13,850. And he knows he's going to claim that because he also knows he's not going to have any itemized tax deductions. Itemized tax deductions include things like real estate, property taxes, mortgage interest, charitable contributions, medical expenses over certain thresholds, He's not going to have any of that. And so for that reason, he just knows, look, I'm going to be claiming the standard deduction for that year. Now, in addition to the rest of his tax items here, John does have some student loans that he owes, right? So he paid $725 in interest during last year, so during 2022. And for 2023, he anticipates the amount of interest he's going to pay is $715. All right, so what are some things that John could do to try to lower the amount of withholding that's coming out of his checks by updating the W-4, right? So if he looks at his W-4 here, most taxpayers are only completing the information we see in front of us, right? So it's their name, address, tax ID number, filing status, and they're actually skipping steps 2 through 4, right? So they don't have multiple jobs, or perhaps they're not married. Step 3 is completely skipped unless you have any qualifying children or dependents that you're going to claim tax credits for. And then in step 4, if you have no other income from other sources, if you're only claiming the standard deduction and you have no other adjustments, and then obviously you don't want to add any extra withholding. So step 4 is just blank too. So John could actually complete this as is and provide it to his employer, and it would be fine, right? And this is what most taxpayers do. However, if John looks at his tax profile and determines, well, there's things I could do to try to lower the withholding, what can I complete here to change things? So step 2 and step 3 certainly don't apply, right? Because he's, based on his scenario, he's got no dependents, he works one job, and he's not married. So what kind of changes can he do in step 4, particularly step 4 item B, deductions, to try to lower the withholding amount? So 4B says if you want to claim deductions other than the standard and want to reduce your withholding, use the worksheet in the instructions. This is on page 3, and enter the result here. Now, what this section is telling us is that, okay, if we're going to claim itemized deductions, then we certainly want to do this section because itemized deductions are going to be more than the standard, or if we have other adjustments to our earnings. And the other adjustments is what we're going to look at here. Other adjustments are reported on Schedule 1 of your Form 1040. So if we're looking at Schedule 1 of our Form 1040, Part 1 is additional income that you might have. And then in Part 2, we have adjustments that lower your income. So things like deductible parts of self-employment tax. We look at IRA, traditional IRA deductions, student loan interest deductions, HSA, so health savings account deductions. These are amounts that are subtractions from your income in arriving at AGI. And you can claim these adjustments even if you take the standard deduction, right? They're separate issues. We have standard deduction and itemized. You have to use one of those two. And then we have other adjustments to your earnings that can be applied regardless of whether you take the standard or itemized deduction. So if we look at the worksheet, if we go down to the worksheet here in the instructions, so step 2 is the multiple jobs worksheet. That doesn't apply to us. We're looking at step 4B, deductions. So what this worksheet is going to ask us is to enter what we think our itemized deductions would be and what we think our other adjustments might be, if we're going to have them. So on line 1 here, it's asking us to enter an estimate of our 2023 itemized deductions. Well, in our case, again, we're not going to have any. So we're just going to say that John has 0 itemized deductions because that is his profile. He knows that he's not going to have those. So then if we go down to step 2 here, it's asking us to enter what is going to be the standard deduction for us based on our filing status. So he's a single filing taxpayer, so $13,850 is going to be our standard deduction. And then on line 3, it's asking us if line 1 is greater than 2, subtract 2 from 1 and enter the result. If line 2 is greater, enter 0, right? And so that's our case, right? Our standard deduction is greater than our itemized, so we're not adding any additional adjustments for itemized deductions. Now, line 4 is where we actually can do something. So line 4 is where we enter an estimate of student loan interest, deductible IRA contributions, and other adjustments, Part 2, Schedule 1, that we might have during the tax year. Okay, so John knows, all right, well, I'm definitely going to have some student loan interest. Remember, if we look at his fact pattern here, he paid $725 in 2022, and he anticipates he's going to owe $715 in 2023. Now remember, on his Schedule 1 here in the adjustments section, this is from, again, his 2022 tax return. There we can see on line 21, he took a $725 deduction for student loan interest. So John could enter the estimated amount of interest that he's going to owe for this year, and that would be an additional deduction that he can report up here in Part 4. Right, so if he's going to pay $715, he can enter $715 up here, and that is going to lower the amount of income that the employer is going to use to compute the amount of withholding tax. So remember, when an employer takes this information, what they're doing is they're making adjustments here in Part 4 to calculate what is your adjusted annual wage amount. So your adjusted annual wage amount, before they look at the tables, will be increased by amounts on line 4. It'll be decreased by amounts on line 5. So any amount of deduction you report up here is going to reduce that adjusted annual wage amount. Now, John could do much more here, right? So if we go back to step 4B, notice they're being asked here for an estimate, right? So what is an estimate of what we're going to be claiming on Schedule 1, Part 2? Well, what if John wanted to make some traditional IRA contributions? He maybe hasn't made them yet, but what if he determines, well, I think that during the year I'm going to try to open a traditional IRA, or I already have one, and I'm going to put in $1,000. So I'm going to have $715 in student loan interest, and I'm going to have, let's say, $1,000 in traditional IRA contributions. So now the total amount of expenses that I'm going to see Part 2 in 2023, right? Again, this is an estimate. It's supposed to be a good faith estimate. The amount of expenses adjustments I'll see down here is going to be $1,715, right? And if that's the case, remember, these have to be fair, good faith estimates. Don't just put down any random numbers here. But if that's going to be the case, then you could claim additional deductions up here to reduce the amount of your withholding. So let's say that's the case for John. John has determined, okay, during 2022 or 23 rather, I'm going to have some student loan interest, and I'm going to have some traditional IRA contributions that I'm going to take deductions for, and that total is going to be $1,715. So I'm going to report that as other deductions up there, and the employer will use that to try to reduce the amount of withholding I'll have. Right, and so for completeness, let's do the whole thing there, right? So the total amount of deductions would be, the combination of adjustments on line 4, right, plus line 3. But again, in line 3, we don't have any additional deductions there because we're taking the standard, we're not itemizing. So the only additional adjustments he would have are they going to be the amounts reported here on line 4, and then that total is now what's reported on line 5. Okay, so if I go back to the slide just to cover some of these other elements here, right? So Schedule 1, Part 2 is where we report those reductions to income. So traditional IRA contributions, student loan interest, health savings accounts, right? So if you have a high deductible insurance plan and you want to open an HSA, remember HSA contributions, generally you can take deductions for those as well. So you can factor that in. And lastly, can't stress this enough, use good faith estimates. Do not falsify information, right? So if you enter false estimates, that's a serious problem, right? Because you're signing this form under penalty of perjury that all this information you're providing is true, correct, and complete. So if you are completing the W-4 and you're actually putting down information that you know not to be valid, that's a real problem, right? That's a big no-no. The IRS doesn't like that. Your employer certainly won't like that. So only put down those good faith estimates that will apply to your tax profile. Okay, so that covers it for this video. I hope that was helpful. If you have any questions, feel free to leave me a comment below. Happy to answer when I can. And I look forward to seeing you again on the next video. Thank you.